the insurance industry created firefighters.
Welcome, everyone, to Unsafe Space. I'm your host, Carter Laren, and as I promised, I have someone with me today who is going to help me dive into why California is losing power and why the major power company PG&E has cut my power a couple times and what's going on in the People's Republic of California. So with that, I'd like to welcome Jacob Faturechi. He's a property, casualty, life, accident, and health insurance broker agent licensed in the state of California. He's a member of the Society of Certified Insurance Counselors, the National Association of Health Underwriters, the Claims and Litigation Management Alliance, and the American Agents Alliance Insurance Association. He's a certified insurance agent for Covered California and an independent broker authorized to offer policies from many different insurance companies. Jacob, welcome to the show. Thank you for giving us some time.
Thank you for having me.
So I know that I said I was going to talk about power, but a lot of people might be wondering, how's this insurance dude have any special insight about power? He's not an electrical engineer and he's not a power management guy. But insurance is one of those things that you mentioned this in a message to me on Facebook. It's one of those industries that I think a lot of leftists dismiss as, I think the word you used was they view it as grifting. Insurance is grifting.
Yeah.
But in reality, for someone like who's an anarcho-capitalist like me, or even just a libertarian, insurance companies actually are the regulations that a lot of people are hoping that the government will handle. Insurance companies are the private market solution to a lot of the risk that people are concerned about when they turn to the government for regulations. And you specifically told me about PG&E's relationship with insurance in California and how this might be a contributing factor to what's going on. Do you mind just giving an overview to our audience about what your perspective there is?
Sure. I guess I kind of have to start off by saying, while I totally agree with you that that insurance is a free market way of making sure people are responsible, right? If something is insured, you know that if I do something wrong, the insurance company has to pay for it. Then the insurance company will be on my back making sure that I'm doing things correctly. And definitely, for people who aren't of the social democrats, socialists, persuasion, it's insurance makes the world go round. It really does. Unfortunately, it's pretty much impossible to have an actual insurance market without heavy regulation. It just doesn't work. It's never worked. And that's kind of what we're seeing in California. So the really obvious thing about PG&E, when we had that Paradise Fire where a large number of people, I believe it was 80-something people died.
86.
Yeah. That really got me very upset because, right afterwards, PG&E filed for bankruptcy because they could, because they only had $1.3 billion in insurance, I believe it was. That's something like that was reported. Now they have 16 million customers. They had 1 whatever million, let's say $2 billion in insurance. That's like $100, $200 per
right
per client, right? I have $3 million of liability insurance. I don't have 3,000 clients,
right.
And most people, $1 million of insurance is considered pretty much minimal, right? So the regulators should have required much larger amounts of insurance for PG&E. And if they had required that larger amount of insurance, then the insurance company would have been on their back to make sure that they weren't causing any fires. But since they were underinsured and the regulators let them be underinsured, there wasn't an insurance company on their back. And I think the estimates I saw was something like $15 billion in damage that fire did. And honestly, I think that's probably a very low number, because if there was an insurance company, let's say there was $1 trillion, which sounds ridiculous to people, but it really isn't. For a company that's servicing 16 million people for something like a utility. I mean, utility, that's a high liability industry. Yeah. So if they had something like $1 trillion of insurance, guess what? After that fire, where 86 people died, whole towns were burnt down, it wouldn't have happened. It would have never happened, because no insurance company is going to allow such a situation to take place where that utility does $1 trillion in damage, which they then have to pay out. But because they are a corporation, they didn't. They just carry whatever insurance is necessary, or will cover how much property they have. They should have been required to carry much larger amounts of insurance, and if they had been required to keep to have that much insurance, the insurance company would have stopped them. And there's a lot more that's also going on because of everything that's happening in the insurance market in Los Angeles. I mean, not just Los Angeles, but in California. But also, there's an insurance problem from the perspective of the homes that burnt down, that whole town, Paradise, which burnt down, right? I'm willing to bet anything that a very large number of those homes were insured by California Fair Plan, which is a government insurer. It's an insurer of last resort, right? So people who can't get normal insurance buy this government fair plan, right? Which is anything but fair, honestly.
Right.
And I hope I don't get into too much problem.
Well, let's just pause. I do want to go down that path, but there's a lot to unpack there that you've said. So let's pause and give people a minute to digest. So first of all, you're saying if PG&E had carried what would be a proper amount of insurance, like if I want to get my home insured for various, let's say, fire or flooding or whatever it is, the insurance company typically sends out someone to inspect my home and see, like, if I want earthquake insurance, they'll say, well, did you retrofit? Is it like, what will happen in the event of an earthquake? Like, let's take a look at what our risk is, so they can do a calculation and figure out how much they would need to charge me in order to actually be able to replace my home if God forbid something happened.
Okay, so I have to kind of stop you there, because yes, that's what happens with property insurance.
Yep.
Here, part of the problem is property insurance through Fair Plan, but as far as PG&E goes, we're talking about liability insurance. And liability insurance, for example, on your home, you usually have $300,000 that's required by your mortgage of liability insurance. If you're running a business, like I am, your various business partners, my business partners require me to carry at least $1 million of insurance. I carry $3 million of insurance for liability. So how liability is assessed is a little bit different. When it comes to PG&E, with the number of customers that they had, the only real person who could have required them to have like $1 trillion of insurance, which I think is perfectly reasonable for, I actually think 16 trillion is reasonable, because when you get up that high, you just want to be high enough that the insurance companies like, there's no way we're letting this reach our
Right. It's
the
basically
limit.
infinite from their
Yeah,
perspective.
yeah.
Right.
From an insurance company's perspective, it should be, there is no way we want to pay this out, although regulators will make sure that the insurance company can in fact pay out what it's saying. Um, but if they had $16 trillion of liability insurance, there is no way any the insurer who was carrying that liability would have allowed them to let their wiring become so messed up that
Right.
what's happening today is happening.
So it is different. So liability insurance is different than property, but I guess my point is really just to clarify in people's minds. It's the same process of they look at risk, they measure risk, and they figure out how to price that risk. And in the insurance company's case, what you're saying is they looked at PG&E and said, whoa, we're not giving you insurance unless you maintain this equipment better. Like we want to really minimize the risk that we ever have to pay out. So in order to even get this insurance from us, there's a lot of stuff you've got to do that's going to make us feel good, like that we're never going to have to write a $16 trillion check. Is
Right.
that correct?
So part of what makes requiring liability insurance so it's such a good thing in society, because if you're requiring somebody to buy liability insurance for something that's not going to happen, they're going to be able to get that pretty cheap, right? So if somebody's telling me, hey, you need to get $1 million of insurance in case you blow up whatever, an insurance company is going to be like, oh, sure, we'll write that and they'll take a minimum amount of premium. So there's nothing, if PG&E did not have liability problems, then buying $1 trillion of insurance would not have cost them very much.
Right.
That's why the regulators can and should, but do not, because of crony capitalism, because obviously PG&E has influence over their regulators. And in California, the people who are regulators are, a lot of them, and it's become our insurance commissioner who just got elected. Honestly, he has no experience whatsoever in insurance whatsoever. He was completely new to it, and the only reason he even decided to run was because he had been a proponent of Medicare for all in California while he was in the assembly, which of course I don't think any reasonable insurance person would think is in any way reasonable.
Right.
But so our insurance commissioner right now, and again, I hope I don't get into too much trouble with this, but he's not a person who understands insurance. Lots of people, insurance is really boring stuff. I love talking about insurance. I'll talk about insurance forever. At parties, my friends know not to bring up insurance. Because it's really boring, dry stuff that people don't want to really think about. So most people have no idea what an insurance company does. They think it's just a middleman. When you listen to the debates, the Democrats have, they talk about the insurance companies like we're completely worthless. If you just get rid of us, life is just simply going to be better because all we do is waste people's money and we're just greedy, right? And people don't realize the insurance industry created firefighters. There were no firefighters before insurance companies created firefighters.
Why don't you tell people about that? Why? How did that happen?
So modern insurance, what I call true insurance, has only existed for a few hundred years. Okay, it happened in a weird primordial soup in London in a specific coffee shop it was just a coffee shop named Lloyd's of London, which you might recognize the name now.
Yes, they'll insure anything, I think.
Well, yes, they are known for insuring anything, like medical marijuana clients. Now we can get them insurance in California as well, but it used to be only out of London. So they also insure crazy things as well as kind of a gimmick. But Lloyd's of London was just a coffee shop. It was just a coffee shop. And the particular environment in London at that time led to what we now know as insurance. Okay, and so, for example, it really started as people betting, right? People would bet on anything, including how long somebody would live, whether ships would come in or not. And it morphed into policies, and they started issuing policies for fires, right? And what happened was insurers had saw that they would pay a lot less if, when there was a fire, they had a fire brigade come and A, try to put out the fire, and B, try to get your stuff out. So originally there were these medallions that people would put on their houses if they were subscribed to a particular fire insurer, and the fire engines would only come, I don't think they had engines back then, but would only come to those houses that had those fire medallions, right? And eventually, it morphed into more of a public good. And similar things are happening today. I think most people who know about cars know about the IIHS safety rating. Very few people think what IIHS stands for. It's the Insurance Institute for Highway Safety. Insurers create all kinds of public goods in order to minimize their own liability. So, yeah.
They put pressure on people to de-risk the likelihood of catastrophic events, or at least minimize the impact, right?
Or even to regulate. For example, the building codes. Most of the building codes, people don't really think who's lobbying for these building codes that we have. Most of the safety stuff, it's insurance companies that are lobbying for that.
Makes sense.
Yeah. And this is part of the problem. One of the reasons fire insurers have started to flee California, and they really have. I mean, I'm even seeing surplus lines insurers like Lloyd's turn down risks in California because I believe, I mean, I don't have any insider knowledge, but my belief is because they don't think it's possible, there's too much political risk. They cannot get the state of California to do the things that they normally require. A surplus lines insurer will hire, firefighting helicopters from other countries to come and fight fires. A little while back, I think it was the Kardashians who had private firefighters sent by their insurance company, and people were really outraged at that. Which, why are you outraged? People are paying more firefighters. That's good for everyone.
Right. It helps everyone. Yeah.
people thought it was outrageous. I think it was on TMZ or something, and people were getting mad. And you get, or in Canada, some insurance companies were starting to pay for climate research, and people got mad. Why are these insurance companies paying for climate research? Well, climate change is an actual, if climate change is an actual threat, which unfortunately we don't have enough good science, then that really matters to the insurance companies. We insure a lot of property. We're talking trillions of dollars in property, which, if there's going to be more more tornadoes, more, whatever, that's a huge deal. So some insurance companies got together and they were funding research at a university on the climate, and people got outraged. People were saying that, it's funny, people from both sides were outraged, right?
Yeah.
The environmentalists were outraged because they were saying, oh, this is, this is capitalism trying to make fake science. And the anti-environmentalists, I guess you would call them, were outraged because they were saying, oh, this is the insurance companies trying to jack up rates with fake science. And it's like, no, we're just trying to find out what's going on.
Yeah, well, I mean, this is the other thing. I mean, this is something that I think of, you can kind of rely on insurance companies to do. Insurance companies, especially in a free market where you're talking about, where like lots of people can provide property insurance, right, or for environmentalists or for environmental damage, they have an incentive to get to the actual answer, right? They're very incentivized to find the real truth, not to have it be less risky than it actually is, because then they'll lose money, not to make it more risky than it actually is, because then a competitor who has a better truth will undercharge them. They actually, the market incentives for an insurance company are aligned very well to understand the exact risk.
In a competitive market, yes, that's true.
What I mean, in a competitive market.
I really have to push back on this free market idea. There's never been free market insurance. Without a regulated insurance market, you get what I call degenerate insurance. Insurance, because of market pressures, insurance is very fragile. Insurance is incredibly fragile, and insurance markets without heavy regulation will collapse very easily, at least into various forms of degenerate insurance. And
can you define what you mean by degenerate insurance? Because I'm not sure I'm following.
So for example, dental insurance, right? Mm-hmm. Dental insurance is not insurance. It's simply not. We know that in the insurance market. It's what we call a service plan, which is a degenerate form of insurance, which isn't fraudulent. Buying a service plan is still useful, but a service plan doesn't have all the various parts of insurance. For example, your dental plan might have a $5,000 limit. It doesn't have a $50,000 limit. So if you have, very serious work that needs to be done on your teeth, they're just not going to pay for it. They have incredibly low limits, which, it's no longer insurance. It really isn't.
I see now. Okay.
But it works, and these degenerate forms of insurance, they're more profitable than actual insurance. And people, unfortunately, consumers are just not sophisticated enough to be able to tell the difference. It's very difficult for consumers to know if an insurance policy is an actual insurance policy. That's why, for example, it's funny. I get a lot of blowback for this. Obamacare has really done wonderful things in the insurance market. One of the wonderful things that it has done is create higher deductibles. That was not a bug, that was a feature. That was something that was very deliberately done, because high deductible health plans function more like insurance. And the 5 million plans that were canceled, that people got really mad about, those weren't even degenerate insurance. Those were just frauds. Honestly, people were buying, they didn't know what they were buying. And they're better off not being able to buy fraudulent insurance. Fraudulent insurance makes my life difficult because people think, that the insurance policies I'm recommending are also fraudulent.
So let's not get into a debate about Obamacare and insurance regulation, because as an anarcho-capitalist kind of guy, I hear what you're saying, that you think there's benefits to it. I'm much more of a let people figure out what they need and don't need, and if they can't figure it out, that's kind of their problem. But I do want to get back to California's fire problem here, because the truth is, so PG&E has a monopoly. It's a government issued monopoly. And so as a result of that monopoly comes with some privileges and some strings attached to it. And one of those strings is they are told how much insurance, not by consumers, how much insurance they're expected to have, or anyone else, but by the state. The state's supposed to tell them. And you're saying state's done a bad job.
It hasn't. I mean, having $1 billion or 2 billion or whatever it was, they went bankrupt. When you go bankrupt because of a liability insurance, because of a liability issue, it means one of two things. You didn't have enough liability, or something really crazy happened.
Right. There was a nuclear war, or something you couldn't have predicted, or something horrible. Right.
Right. And honestly, there is no reason why a company that's worth, I think they were valued at around 2 billion, wouldn't have 100 times that in liability insurance, except, they know what's going to happen to them. Okay, they go bankrupt. Nobody's going to go back and take the money that they paid out already away from them.
Right. So explain that to people, because I think a lot of people hear bankrupt and they don't understand that when you've got a cronyist system and you've got people declaring bankruptcy, it's actually not bad for the people declaring bankruptcy. It's a way to get out of debt. Can you explain that to people a little bit?
Sure. I mean, what you can do without proper insurance, what you can do is create all sorts of liabilities that are going to come down the pike. The best example of this would be the mines with black lung, right? So all these workers went, we're doing work that we all know, mining is going to wreck the people who we may not have realized black lung, but look, it's wrecking people's bodies, right? And if there is not proper workers' compensation insurance required, then a mining company is going to do precisely what they did do, which is they will pay people with what seems generous and ruin their bodies, and then go bankrupt and leave society with all of these people who, well, what are we doing? We're actually bailing them out. The government is bailing out all these, the Black Lung Fund. I don't know how much it is, but that's something that should have been covered by workers' compensation insurance. right?
So if PG&E knows that they have this kind of, I don't want to call it a get out of jail free card, but almost like a, well, we can amass some liabilities and we can always just declare bankruptcy and no big whoop. They still get to operate through bankruptcy, and many of the execs gets to keep their jobs and come out on the other end. They just get to shirk the responsibility of paying debt that they owe.
And they keep a minimum amount. I mean, what's supposed to stop that is the company keeping enough, enough assets, but no reasonable company actually keeps more assets in the company than they really need to. They pay that out as dividends, right? And the people who got the dividends, right?
Right.
So
That's never gonna, you can't
you're
claw
not
that
going to
back.
recoup that. Yeah, that you're never going to recoup that. So requiring companies to have insurance is a way of making sure that they'll still be liable, that they'll still, somebody will pay out if they do whatever they do, and it just keeps them honest. It really does.
So you mentioned something else that you think the state failed at. So we're talking about kind of PG&E failures here, mixed with state not really requiring the amount of insurance that would rationally be required. You also talked about the state not really maintaining the forests in the way that maybe an insurance company would have asked for them to do. Can you talk about that a little bit as well?
Sure. So, when an insurer, you know, whatever, if Paradise had been privately insured, right? Then the insurance company would be, hey, look, we have to do something about making sure that this town doesn't burn down, because when the town burns down, guess what? The insurance company has to rebuild that whole town. That's going to be very expensive. Because we have these insurers that aren't private insurers, and this also happened with the National Flood Insurance Program, right? When you have these public insurers which don't function as insurance companies, so they don't do the things that a private insurer does, like actually send out inspectors to your home. I think people who have private insurance who live in brush area are, have had this happen where their insurance company sends them a notice, says, we want proof that you cleared your brush so many feet from your structures, whatever, right? And beyond that, once the insurers have enough liability in a certain area, and that's why you have regional insurers, right? So I can't get insurance, private insurance, for most of my clients who live up in the Mulholland area where there was the fire, right? The Bel Air area. Those are very expensive homes. Almost a large number of them are insured by California Fair Plan, which is a public insurer, because you can't get private insurance. No private insurer is going to insure that area without making sure that they're not going to be writing these huge checks. One of the ways they do that is by making sure that the fire departments are adequate, the hydration is adequate, but they also would get involved in forest management. I don't know that that's the reason why fire insurers are fleeing California. I do know that fire insurers are fleeing California. Like I said, when Lloyd's of London says, I'm not going to insure you, there's something wrong there.
Yeah, fair.
they might raise their prices, but I have clients who've received cancellation notices from Lloyd's of London for their home owner's insurance. That tells me there's something going on there, something that's not normal. And I think the forest management part of that is part of that. look, public insurers are a disaster, I believe.
Well, what incentive does a public insurer have to actually do a good job? They don't really.
A public insurer is not an insurance company. They will never act the way a private insurer does. I give this example a lot. So with Medicare, you have the choice of basically a voucher program, or you can stay on original Medicare, which is through the government, right? Well, original Medicare will not cover Viagra. It doesn't cover Viagra, and it doesn't cover gym memberships because it's written in the law. Some politician went out there and was like, we're not going to pay for people's Viagra and for their gyms, right?
Right.
Every single private insurer that I know of definitely offers gym membership for free to all their Medicare patients. And a lot of them offer Viagra. Why? Because they don't care about how it looks. They care about what that means to their bottom line. And having people go to the gym is worth it for them.
Yep.
Having, Viagra, it might not sound like it's a very important thing, but you know what? Somebody who's having problems is more likely to be depressed, more likely not to be socializing, and not exercising and not getting out there and not caring about their looks and, all of the things that go along with that.
Right.
So, when is a public insurer going to be able to pay for Viagra by convincing people that that's something we should do? The private insurers are doing it.
Right, because they're just looking at the risks, and they've got an actuarial table, and they realize, I don't care what it looks like. It's cheaper to supplement Viagra. So done. Yeah.
Exactly.
Yeah, that makes a lot of sense. Now, the other thing that when you have something that's occurring to me, I'll bounce this off of you, but it seems like if you've got something like California Fair willing to insure homes that couldn't receive private insurance normally, or at least not economically, it seems like you're also signaling people that their risk is lower than it actually is, because they're like, well, I have this house, and like, if I was going to go buy a house and I went to get insurance before I bought the house, and every insurance company was like, no way in hell are we insuring that house, I might not buy it. I might be like, well, there's something risky here. I don't know, maybe it's fire, landslides, whatever, earthquakes, whatever it is. Something about the house is not a good investment.
Your bank is not going to give you the loan. You're not going to be able to get a mortgage without insurance on that house.
Right. So I wouldn't do that. I maybe if I had the money, I wouldn't do it. And if I didn't have the money, I wouldn't be able to borrow it from the bank because I couldn't get insurance. And so, but now you have a public entity coming in, offering insurance when it actually shouldn't be offered. And now we've got people building and buying homes, and there's an entire market of these homes that's being bought, sold, and lived in, which maybe actually they shouldn't even be there.
100% agree with you. A lot of these homes, especially what gets me is this is crony capitalism, because very few of these homes are actually, they're people, working class people who are, the people who own these homes, they may be in Malibu, Bel Air, I think, I don't know what percentage, but it's that I would be surprised if it's less than 50% of the homes in Bel Air are being insured by California Fair Plan. It's crony capitalism at its worst.
And those are expensive homes that the rest of us in California are subsidizing with our tax dollars when they do that too.
Yeah, with your tax dollars and with your insurance dollars, because California Fair Plan, part of how fair plan works is by taxing the other insurers. So it's, yeah, it's a very similar thing with the low-income car insurance plan that California has.
Right.
A lot of the people who are on that are actually they're people who are low income, but not necessarily people who are you would consider working class, right? They tend to be middle class, college students who in a few years are going to be very rich, or whose parents are very rich, who end up on I cannot express what an abomination I think public insurers are. They really, really mess with the market in horrible ways. I understand to some extent. I mean, in Los Angeles, we have a public health insurer, LA Care, which competes with the private insurers. And a real public insurer can't they, because they are public and they function the way government functions, and they're not as nimble and all that, it's not very competitive with the other insurers. It just isn't.
But it could distort the market, just like you're seeing FAIR do. So, yeah. So, what do you think? Look, well, what's in store for PG&E, and do you think California regulators will be taken to task for not doing their job here, or what?
I would be surprised, and I would be very surprised if what I think needs to happen, which is requiring our utilities to purchase enough insurance, is what happens. Because you have people on the right who are like, oh, private business,
Right.
Less regulation is better, and then you have people on the left who are like, well, insurance is just a scam and whatever. But what really needs to happen, which I would be shocked if it were to happen, is somebody like the insurance commissioner should be coming out and saying, hey, you know what? This is a problem that insurance could fix.
Yeah.
Unfortunately, it's an elected statewide office, and people don't get elected to be insurance commissioner because they know a lot about insurance.
Right. Well, look, as one of the people who is generally a less regulation, free market person, as you know, the truth is, though, we also have to address the reality that if we are going to have, which apparently in California we are, if we're going to have a one company monopoly on energy that's regulated in some way, well, it better be regulated as best as possible, because there isn't any competition. There's nothing to like. This. I don't have the fantasy that we're gonna suddenly dismantle things and have free market energy in California. So like, we are stuck with PG&E. We are stuck with them as a monopoly, and it seems like at the very least we could regulate them properly. We could have them run rationally in a way that a good electric company should carry insurance.
To steel man the minarchist position, which I try to do. I'm a big fan of Brian Kaplan as much as anybody else. But if insurance is used to stop externalities, right, that can still be a minarchist position of you have to carry enough insurance to cover your externalities. If you're going to be polluting, if you're going to be, liability, whatever it is, I want you to show me that you have enough insurance to cover whatever those liabilities are. And if it's not a real, if it's not something we have to worry about. For example, pipeline leakage. I wish the pipelines were required to have huge amounts of insurance. You know what? If you're right and it's not going to leak, the insurance will be very cheap. And if you're wrong and it is going to leak, then that insurance company is going to come and pay for whatever cleanup is necessary. So from an externalities point of view, you can require enough insurance, and the market will set the price for that insurance. If you have a healthy insurance market, if it's a low risk, you'll get cheap insurance, and if it's a high risk, you'll get expensive insurance.
Or you'll fix the problem, make it a low risk. Right.
Right.
Yeah. Yeah, you're getting dangerously into talking about how actual anarchy could potentially work, but we'll leave that for another.
That would require the possibility of having insurance without government regulation, and that's never happened.
It may never happen. I think part of that, I think part of the problem that we see, just one of the long-term effects of having the government involved in things, is it's a way of abdicating personal responsibility. And so people don't learn to make smart decisions and require the right things from the people they do business with, because government is daddy. And my belief, and we don't have to debate this, but my belief is that over a long period of time, if the government wasn't involved, people would get burned at first. And then there would be cultural knowledge of like, that's not the way we need to do things. We need to require. There would be cultural knowledge that would get transmitted to, and you would have agreements when you went to buy a home, right? The bank would be like, well, you're near this power line and this power company's not carrying this much insurance. Like all of that would happen. It's a fantasy because we're not there. We're nowhere near there. And I recognize that.
Insurance markets are very fragile. I compare them to a delicate flower the way only an insurance agent would. We've only been able to cultivate them in greenhouses.
Yeah. Well, look, I really appreciate you coming on and giving some insight into what's going on with PG&E and California. And, I think what I like about this story is people always look to kind of the obvious things. They didn't do this. They didn't do that. The government didn't clean up the forest. The PG&E didn't maintain their equipment. They gave bonuses to their execs. All that may be true, but the underlying cause is really when you talk about incentives. And you've really hit as boring as insurance may be to some people, it's really the key to the incentive structure that allowed all of this crap to fall apart in California.
One of the best things about insurance, one of the most important things about insurance, is it makes people be responsible for what they do, and that is, that's why we require people to have car insurance, right? It makes you be responsible.
Yep, well said. Well, Jacob, thank you very much again for joining Unsafe Space. I appreciate your time and expertise, and maybe we'll have you back to talk about insurance in some other capacity another time. I
never stop talking about insurance.
Well, I don't think Carrie's going to invite you to any parties with that attitude, but I might. Thanks, Jacob.
Bye.